Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora koutou and welcome to the fifth episode of Markets, Mystics and Mayhem. This week we want to talk about business. We want to talk about the confidence of Kiwi businesses and how it's evolving. We want to explore which industries are doing well and what the outlook looks like. Because we've been in recession for 2 years, so Kiwi businesses have been doing it tough. But the Reserve Bank is cutting, there's light at the end of the tunnel, businesses are becoming more optimistic, and it's just a great time to start talking about next year and beyond. So what we're going to do is we're going to bring in Elliot Smith. He's the head of Kiwibank's business banking. He's had a phenomenal few years, and I'm really excited to talk to him about what he's seeing on the ground, in the trenches, and what's happening in the broader economy. So let's get started. It's going to be an exciting episode. Wishka.
All right, newsflash. We've just received the latest business confidence survey, the survey of business opinion done by the NZIER. It's the best survey we've got in New Zealand of businesses, and the report itself was quite mixed, actually, but mixed in a good way. We saw a decent lift in business confidence, particularly forward-looking. So looking to next year, businesses are much more upbeat now that the Reserve Bank is cutting. But the here and now, the activity indicators are still depressed. They're still in recession, and there's not a lot of pricing pressure coming through, which is good for the Reserve Bank on the inflation front. But for more information, for more detail, I'm going to hand over to MJV.
Yeah, well, in terms of the detail, a net 5% of firms expect economic conditions to deteriorate in the coming months. That's a much, much smaller proportion of firms than the net 40% that had the same feeling in the previous quarter. So that tells you that business confidence is improving and improved a lot over that September quarter. And I think it's not just because of that August rate cut that the Reserve Bank had delivered. It's just that expectation of more cuts to come that really, underpinned that lift in confidence. But, the businesses, as you say, are lifting their heads and they're looking to next year, but they're looking to next year cautiously because hiring and investment intentions, they're still quite weak. It's going to take some time for that optimism to feed through to actual activity. But as you say, around the pricing intentions, just 3% of firms had raised their prices in the September quarter. Again, that's far fewer than the net 23% that did the same thing in the June quarter. So that tells you that inflation is really becoming benign here in New Zealand.
Yeah, it's good news, and we've seen this before. We saw business confidence spike after the election last year with the change in government, change in various policies coming through, got businesses excited, but it was only a few months later that confidence started to fall again on the realization that we're still in recession. It's been 2 years of recession, but I think this time's different. The central bank is cutting and will continue to cut into next year, and those rate cuts are going to fuel not only business confidence but household confidence. And our forecasts are that we'll start to see, a meaningful pickup in economic activity and growth next year. So watch the space. It's good news, and we're on the right path. We're now going to head over and speak to Elliot Smith, who's our head of business banking, to get some better insights as to what's happening in the business community here in NZ.
All right, kia ora koutou, and we're back. It's fantastic to have Elliot Smith, our Chief Customer Officer for Business Banking at the mighty Kiwibank. Thanks for coming in.
Thanks, JK. Great to be here. Thanks for having me.
Yeah, absolutely. To be honest, you've had a phenomenal run. I think what we've seen in our business bank has been incredible. The mindset change, the capability, execution, just like an amazing run, but quite different to other banks.
Yes.
So we'd love to hear, the journey that the bank has been on, and what you're thinking about business banking in general.
No, thanks. Great to be here. Good to see you again, MJ. Yeah, it has been a good run. I think it's been the power of consistency has been, our secret weapon a little bit, JK. Certainly in the last few years, even through COVID, the market was definitely tricky. The appetite, I think, for some of our competitors has sort of ebbed and flowed. And for us, I think one of the big things that we've really talked about is how do we consistently be open for business? How do we consistently be just showing that enthusiasm and excitement for Kiwi businesses, and that has definitely demonstrated, the last few years, has shown through the results, which is nice. Good reward, I think, for the mahi that sort of our people are doing sort of every day. We've doubled our business bank in the last 3 or 4 years, which is pretty exciting. We've got ambitions to double it again over that sort of time period. So, again, I think, JK, that consistency's been the key. And one of the things I've sort of noticed over the last few years, certainly with the market, is that appetite has shifted around. You would have seen it depending on the competitor, which is fine. A lot of them were a bit quiet through the last 12 months, and that does happen, I think, in markets like New Zealand, where they've got both management teams here, but they've also got management teams in Australia that are dictating things that need to happen for the group. So you do see appetite soften on property or other parts of the economy. So for us, I think, again, just back to basics, being really consistent in market, always talking to customers and being open for business, I think, has been a real key to that.
Absolutely. I heard one stat, and correct me if I'm wrong, but 70% of all business lending was done through Kiwibank.
Yeah, it's there's a phenomenal statistic. It's going back a few months now from that time period, and Fran, the financial journalist that printed that report, which was really well thought through, well researched article. But a lot of small numbers, JK, in some senses. If you look at the growth in the absolute system, numbers of sectors went backwards, and certainly, in large corporate there was declines. But I guess that is a really great indication of what it's like to be at Kiwibank, is that when we're open for business, we genuinely mean that every day, not just some days. And that is a big statistic. We are the fastest growing bank in New Zealand and have been for a number of years. Fastest growing business bank, and our retail friends are doing a great job as well. It is a big statistic and a stark one, but I think one that really shows for us the power of the brand and the power of customers really believing in what we're doing.
Yeah, absolutely. And from an economist's point of view, I hear that number and I go, that's phenomenal, right? And it is. But then I also think, how does a 10% bank do 70% of all lending? And there's been obviously a shift in appetite from our competitors, right? And they have stepped back. And I hear it when I'm on the road. You've got business bankers all around the country setting up really cool events. And when we get to talk to businesses, I hear it from them, straight up, like it's Kiwibank's the only bank that's open at the moment for certain deals. And I think that consistency is key.
Yeah, look, the reality is that will change. There's they're big organisations, well run, have shareholder expectations and performance objectives. So that time, probably even now is coming to an end. We're certainly seeing, plenty of competition in the market for types of customers, certain segments, and certain banks. But yeah, it certainly was quite surprising for us about how quiet some of them were, and that's that happens sometimes. I think for us, certainly, looking forward, we're really optimistic about 2025 and even the back end of this calendar year. We've got really great signals now from the Reserve Bank, which is giving businesses more confidence, and that will really help through to Christmas and out the other side. It'd be nice to see another couple of moves down pre-Christmas, which I know you're both calling for, which we are as well. But again, I think the market's competitive dynamic and our Aussie owned friends, will bounce. They'll bounce back because they need to get whatever targets or performance objectives that they're shooting for. They'll be back. Our job, if I'm frank, our job is just to be really, really consistent again and continue to show up with the enthusiasm. And what we have found in the periods where they have been quiet, and customers maybe weren't getting the deal that they thought or weren't getting the experience that they thought. The door we knocked on 12 months ago and 18 months ago, surprisingly pushed a bit further open. The next time we knocked, and
yes,
we won't win all the transactions that we want to have a crack at, but we're certainly consistent. And if we miss, then we can come back and have another go. And I think that's part of the spirit that we're trying to show up with, is that hunger and enthusiasm. We might get outspent on things, but we hopefully won't get out enthused in the market, and that's something that I think we really stand for.
Yeah, I like how you mentioned that 2025 is going to be a good year, and we're optimistic because we are. Things have turned, rate cuts have happened. So we echo that thought, right?
Yeah, 2025 will be that year where we see a turnaround in activity because of the expectation of more easing to come. Right now, it's not looking the best with pretty subdued activity. As you said, business credit grew just 2.2% in the June quarter. So pretty weak. That's well below the long-term average of 6%. But next year, we'll see that turnaround. For now, it's business credit's being weighted down by below trend economic growth and pretty weak activity, but next year we should see that turnaround, see more expectations coming through across the desk. Well,
we're certainly seeing a lot more interest from customers, and my encouragement to customers, if you happen to be watching this, is get in touch with us early. One of the things that we love about an early conversation is that we can provide thoughts and opportunities and ideas, different ways to structure things if that's the conversation. Early engagement with our risk teams and our internal product teams as well. So again, even though whilst we're looking forward to 25 and hopefully the economic activity rolls through, we're really confident about that. Early engagement and conversations this year is a great way to start 2025 as well. So certainly in events that you're hosting have been really encouraging about the conversation for customers, and we're certainly seeing a lot more activity from our exporting market, from our wholesale and manufacturing clients. Certainly we'll see a bit more into healthcare and other growth areas. I think in New Zealand we had a fantastic conversation about the bioeconomy with some experts the other week with some Kiwibank management team. So for us, I think seeing those opportunities, knowing sort of how to show up and prepare for them, I think we're really well placed for the back end of this year and into 25.
Yeah, I think that's what we're hearing as well, that the lending applications or the business that's coming through, it's about planning for next year. It's not so much about the need for funds to cover costs anymore. It's more about investment activity, potentially expanding business next year, and that those decisions need to be made today. And they're a bit more concrete now because we have this expectation of further rate cuts. So, lending will be much, much easier next year.
Yeah, one of the tricky things about lending, I think, is you sort of always, not always, there's a tendency to look back, tendency to look at the historical financial statements, or, what I'd encourage customers and our teams to do, which we're wanting to continue to do well, is be looking forward. What are your forecasts? What are we seeing? We know the interest rate curves softened quite a lot, so last year's results, particularly around interest cover and things, are very different than the one that we'll look forward to. So certainly if you're a customer, don't worry so much about the shape of the FY24 numbers, because we know that there will be some things in there that, very unlikely to repeat looking forward. And that's a mindset thing for us and for customers as well. So, definitely encourage people to be really thinking, what are your projections? What are you seeing about your forward order book? What do we think interest rates are going to do? Because we know that they're on the way down. The path is still TBD, but direction set, so which is pretty exciting, I think, for people making longer term decisions, particularly investment decisions, whether that's capex or the like. So again, I think for us, just looking forward, making sure that we've got that real confidence about what we're seeing in the future rather than what we're seeing in the rear vision mirror is pretty important, I think, as well, JK.
Excellent. Well, thank you very much.
My pleasure.
For joining us. There's some great advice there. Get in early to the bank and be more forward-looking. And being forward-looking, that obviously involves, economists and our projections, because we always get it right. So come to us, you'll be sorted and well done. So that's it for this week. Done. You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.